Hi, I'm Saba Yasmin with Realty One Group Central, your trusted real estate partner here in New Jersey. When buying a home, one of the most important pieces of the puzzle is understanding cash to close. It's a term that comes up in every real estate transaction, and knowing what it means can help you prepare with confidence. Let's break it down together. Cash to close is simply the total amount of money you'll need to bring on closing day to officially purchase your home. This number includes more than just your down payment. It also accounts for closing costs, prepaid expenses, and any adjustments for deposits or credits. You'll receive your official closing disclosure at least 3 business days before your closing date. This document lays out your exact cash to close, so there are no surprises. Let's talk about what goes into that total number. First one is down payment. Depending on your loan program, this might be as little as 3% for conventional loans, 3.5% for FHA loans, or even 0 for VA loans if you qualify. Many buyers choose 5% to 10%, though some still prefer 20% to avoid private mortgage insurance. Second component of cash to close is closing costs. These generally range from 2% to 3% of the home price. They include things like attorney fees, which are common here, title search and title insurance, appraisal, survey fees, and county recording fees. Then there is prepaid expenses. You'll likely need to prepay a portion of your property taxes and homeowner's insurance. In New Jersey, property taxes are paid quarterly, so lenders typically collect 2 or 3 months upfront at closing to fund your escrow account. Last but not the least, there is deposits and credits. Any earnest money deposit you've already made will reduce your cash to close. If you've negotiated seller credits, for example, if the seller agreed to cover some of your closing costs, that will also lower your final number. Many buyers confuse closing costs with cash to close. Remember, closing costs are only part of it. Your cash to close includes the down payment, prepaid items, and then subtracts deposits and credits. Also, while some costs can be rolled into the mortgage, your down payment and most prepaid items must be paid upfront. A simple formula to keep in mind is cash to close equals down payment plus closing costs plus prepaid expenses, deposits, credits. When you get your closing disclosure, review it carefully. If anything looks unclear, ask your lender or your agent right away. In New Jersey, because attorney review is part of the process, you'll also have a professional checking those numbers for accuracy. In New Jersey, most closings are funded with either a wire transfer directly to the title company or attorney's trust account, or a cashier's or certified check. Always confirm the instructions directly with your attorney or title company. Wire fraud is real, and you want to be extra careful about verifying details. To sum it up, understanding cash to close means walking into the closing table with clarity and confidence. When you know what to expect, the process feels much smoother. And before you know it, you'll be holding the keys to your new home. If you're thinking about buying or selling, I'd love to guide you every step of the way. Saba Yasmin, your trusted real estate partner here in New Jersey. 609-232-2645. saba.yasmin.realtor@gmail.com